Clerk will now proceed to read the orders of the day.
Supply and Appropriation Main Estimate No. 3 Bill, second reading.
Now.
Minister to move formally.
I beg to move.
The question is that the bill be now read the second time. As many as that opinion say aye.
Aye.
Of the contrary, no. I think the ayes have it. The ayes have it. The question is that the bill be now read the third time. As many as that opinion say aye.
Aye.
Of the contrary, no. The ayes have it. The ayes have it. I got point of order, Mr. Patrick Grady.
Thank you, Madam Deputy Speaker. In the time that it took the Minister from the Treasury there to pour himself a glass of water, the House authorised the Supply and Appropriations Bill, which, amongst other things, includes authorisation for the use of resources year ending 31st of March 2020 to be increased by £384,553,768,000. And it goes on to authorise all the rest of the expenditure of similarly great magnitudes that the government expects to use over the next couple of years. Madam Deputy Speaker, without any possibility of debate or possibility of amendment, which is not what members from the Scottish National Party were led to believe when the English Votes for English Laws process was introduced, when we were told that estimates was how we would scrutinise Barnett consequentials of estimates. Now, the bill represents the supply element of the confidence and supply arrangement that one of the other parties in this House has with the government. It's good to see at least a couple of them are here, which is more than there was last time the supply estimates went through. I just wonder if you can advise, Madam Deputy Speaker, if there are any other mechanisms available to groups of members of this House to secure £1.5 billion of funding for their constituencies without any of them really having to show up very often.
Well, I thank the honourable gentleman for his point of order, and I understand the point that he's made. I will separate his party political points, which of course are not a matter for the chair, from his procedural points, which are partially a matter for the chair. And I would advise the honourable gentleman that although he and his colleagues might not have had the opportunity to examine every line of proposed expenditure, we did have 2 days of debate, yesterday and the day before, on some of the aspects of the matters contained in the bill which the House has just passed. And but the honourable gentleman makes his point very well. I fully understand his criticism of the procedure. It's not for me to agree or disagree with him, but I'm quite sure that the Procedure Committee and others will take seriously the points that he's made. I call the Minister to move motion number 3 on income tax. Mr. Jesse Norman.
Thank you, Madam Deputy Speaker. I beg to move that the House considers the Capital Allowances, Structures and Buildings Allowances Regulations 2019. Madam Deputy Speaker, the instrument before the House today gives effect to amendments to several tax acts, principal among them the Capital Allowances Act 2001. The Government is determined to ensure that the UK tax system supports business investment and jobs. At 19%, the UK has already reduced its corporation tax rate to the lowest in the G20, and it is scheduled to fall still further to 17% in 2020. The Government also recognises the importance of providing tax reliefs for genuine business costs. That is why it is taking steps to increase the overall competitiveness of the capital allowances regime. At the autumn budget, we announced an increase in the annual investment allowance for plant and machinery to £1 million per annum for 2 years, meaning that businesses will be able to deduct 5 times more qualifying plant and machinery expenditure in the year they make the investment. However, the UK is currently the only G7 economy that offers no capital allowances on investments in structures and buildings. That means no allowances on critical investments in bridges, roads or tunnels as well. It means no allowances on investments in shops, offices or factories. In the 2018 budget, the Government set out to rectify this gap in the capital allowances regime by providing relief to businesses on qualifying expenditure on new non-residential structures and buildings. The Finance Act 2019 gave power to that effect, and I am now pleased to bring forward the draft statutory instrument necessary to enact this change. It was important to follow this legislative process in order to provide taxpayers with certainty that the allowance will come into force as soon as possible, to minimise the risk of deferred investment and to allow the government to consult extensively on this important measure, as it has done. At the budget, the government published a detailed technical note for consultation that outlined the key features of this new allowance. Businesses that invest in new builds or renovations on or after the 29th of October 2018 will be able to claim tax relief at 2% a year on eligible costs over a 50-year period. Following this first round of consultation, officials met with scores of different companies, representative bodies and individuals from across the country. At Spring Statement 2019, the government published detailed draft legislation and invited further comments from stakeholders. I'm pleased to report, Madam Deputy Speaker, that the vast majority of stakeholders welcomed the Structures and Buildings Allowance. And I hope I may extend my thanks to the many individuals and organisations that participated in both rounds of consultation, either in person or through written representations. Stakeholder responses have been a considerable help in shaping the new allowance, leading to amendments including those relating to short-term leaseholds, eligible pre-trading costs and periods of disuse. As I have said, the Structures and Buildings Allowance has been designed to enable businesses to claim tax relief on the costs of new non-residential structures and buildings. This means that qualifying expenditure on new builds or renovations for which all the contracts for the physical construction works were entered into on or after the 29th of October 2018 will be eligible for relief. Relief will be available for any business which fulfills two conditions. First, to own a qualifying asset either through direct building or by acquiring one from a developer, and secondly, to use the building for a qualifying activity for which they are chargeable to UK tax. Qualifying persons will be able to claim tax relief at 2% a year on eligible construction costs, including renovations. The allowance will apply across all sectors and sizes of UK trade, benefiting business owners, workers and the wider economy. The relief will be limited to the costs of the physical construction of the structure or building, but not for the costs of acquiring the underlying land, rights over land or planning permissions. In summary, Madam Deputy Speaker, the regulations before the House today will enact important improvements to our capital allowances regime, in line with the power this House approved in the Finance Act 2019. Since the 29th of October 2018, business investments in new and renovations of old structures and buildings have been accompanied by an expectation of this allowance of 2% relief per annum against their income or corporation tax bills. It is now important for the House to honour the commitment made in the Finance Act 2019 by enacting the Capital Allowances, Structures and Buildings Allowance regulations, thereby bringing them into force in line with their commencement provisions. And therefore I commend these regulations to the House.
The question is motion number 3 as on the order paper. Mr. Peter Dowd.
Thank you, Madam Deputy Speaker. The Minister says he got support from businesses for tax relief. Well, that's not a surprise. When people are offered tax reliefs, no doubt they'll accept them because it is cash in their pocket. But the Institute for Fiscal Studies, in a document on the 5th of August last year, I think it was, currently our tax system does not consistently deduct the cost of investment, meaning that some investments are discouraged, some incentivised, and some unaffected by our tax system. It also went on to say there should be a clear policy justification, focused, and actually the benefits outweigh the costs. And it went on to say too many tax reliefs have weak or poorly articulated policy aims. And then it went on again to say, digging into the detail, and evaluating how each tax relief stacks up against a clearly stated tax design is important. The bar for introducing any new reliefs should be high. And of course, it then, I think, on the very same night, had a debate, i.e. the Chartered Institute of Taxation and the Institute for Fiscal Studies had a debate which talked about business tax reliefs and asked the question, corporate welfare or essential elements of the tax system? And the question is, do we think this is an essential element of the tax system? And in the Finance Bill, we raised issues in the debate, we raised matters in relation to this, and of course we were not able in any way to amend the law, which is regrettable. But we did raise, in a sense, the whole question of tax reliefs. And it's a desperate shame to find ourselves here again debating the introduction of yet what amounts to another corporate tax relief, when so little has been done to sort out the scope of the scores of tax reliefs which are already in operation. At the last count, the government is responsible for the management of 115 principal tax reliefs totalling £430 billion, as well as 80 minor tax reliefs totalling an estimated £690 million. However, alongside these are up to 235 reliefs in operation for which we have no cost data at all. I repeat, Madam Deputy Speaker, that we are foregoing revenue on 235 tax reliefs for which HMRC doesn't count the cost. And I find this quite remarkable. I can't think of a single other policy area where the Treasury would be uninterested in government expenditure. And those opposite tell us that the cost of these reliefs is negligible and therefore there is no point in making efforts to manage them more effectively. But I don't believe that holds water, especially when one could consider that the government regularly deprives citizens of small but essential sums of social security for the crime of being perhaps 5 minutes late to the job centre. So perhaps the Minister can explain why it is that his government can give away millions to large companies without counting the cost, while stripping the poorest in our society of the pounds and pence they need to survive. And especially, I've got to say, in a very interesting article that the Minister had in the Sunday Times some weeks ago about One Nation. And I think so it'd be interesting for him to comment on that. And I agree with him. We've got to bring the nation back together again. And that question is an important part of that. I'd also like to know what efforts the government have made to improve the management of tax reliefs at HMRC. So will the Minister now commit to a moratorium on introducing any further tax reliefs unless their annual cost data can be collected and published by HMRC? But turning to the specific measure before the House, it won't surprise anyone here that the pile of opaque and unaccountable tax reliefs is being added to with yet another tax relief for businesses, which is doesn't necessarily, in a sense, fit the robust criteria that is set by the Institute for Fiscal Studies, and which this House should set in relation to the introduction of tax reliefs. I shall give way to the Honourable.
He was talking about the cost of tax reliefs. Has he worked out the cost to UK business and investment of imposing a 10% a policy that requisitions 10% of businesses who have more than 250 employees, which is, I understand, is Labour Party policy?
Well, I don't think it's a question of requisitioning. I think it's a different approach and a different look to engaging workers in our economy. That's it. It's as simple as that. Now, I appreciate the honourable gentleman. Doesn't accept the concept. I completely accept that, but that doesn't mean to say that the concept isn't wrong. The government boast about their corporation tax giveaways, but it's clear that even those billions stripped from our public services are not enough to satisfy the government's intentions in relation to corporate welfare. Furthermore, it seems that in their rush for the giveaways, they have given no consideration as to how this measure will fit into the already complex and convoluted system of capital allowances. So it's not necessarily saying I agree or disagree with this. It's a question of saying we have a convoluted system, and it is incredibly complex. We don't have any review mechanisms on these reliefs. We don't have any sunset clauses on the reliefs. We've debated that, in fact, in the committee in the past, and the government just seemed to have no response to that. So this new measure for structures and building allowances will provide relief for qualifying expenditure on new non-residential structures and buildings incurred on or after the 29th of October 2018, as the Minister said, on a 2% per annum straight-line basis. And at the Finance Bill earlier this year, the Government blocked our attempts to require ministers to publish details of the likely take-up of this new allowance across different sized businesses. And despite these concerns, the secondary legislation before us remains vague, with important definitions that would assist in addressing areas of ambiguity now being delayed and deferred to guidance. And we've had lots of this deferral to guidance and secondary legislation and other forms, potentially even tertiary legislation in due course. And it really isn't good enough. We need transparency and openness. We don't need to be told this is going to happen, but the detail may come a little bit later on. Similarly, the decision by Minister to delay finalising the details of this new allowance until June, when the final stages of the Finance Bill took place in January of this year, is yet further evidence of the continued environment of uncertainty business is forced to operate under the current government. The Chartered Institute of Taxation, Madam Deputy Chair, quite rightly criticised the government over these new regulations, stating at the time of the 2018 budget that it is neither sensible nor responsible for the government to introduce reliefs into the tax system at a time before they have consulted upon the scope and the application of the relief or fully considered and are therefore able to legislate for the details of the relief. And they also concluded that these regulations will only complicate matters, particularly given that plant and machinery is excluded. This means that taxpayers are still required to identify the plant and machinery built in buildings with the same grey area that currently exists between buildings, fixtures, plant and machinery, while the administration of this new allowance will be substantial and burdensome for businesses, flying in the face of the government's initial promise to actually simplify the tax system. Madam Deputy Speaker, the demotion of much of the detail of this allowance to secondary legislation remains of concern to the opposition, particularly given that capital allowances are yet another means of extending back tax breaks to large businesses, many of whom do not need the relief necessarily. The reality is that many small and medium-sized businesses who desperately need support from the government will struggle to access this relief without incurring substantial costs in hiring experts to guide them through its complexities. And rather than continuing this piecemeal approach that only seems to confuse and deter businesses in need, we remain instead committed to a review of tax reliefs in government which will evaluate individual reliefs against their effectiveness and value for money. It seems that, again, the opaqueness of the government will not commit either to a proper review of this measure before us or a wide review of the full plethora of their corporate relief giveaways. Madam Deputy Speaker, there's no way that this isn't a way to run the country. Once again, the devil will be in the detail of the guidance that HMRC publishes, particularly around what constitutes qualifying expenditure, the definitions around terms such as dwelling house and mixed-use building, clarification over the treatment of successive leases, and over the new flexible rules in instances where expenditure is incurred after a building comes into use. Therefore, while the opposition remains sceptical over the introduction of yet another poorly considered allowance on top of the 1,200 allowances that already exist, many have been there for decades without review, we won't be voting against the secondary legislation today. Instead, we will wait to scrutinise the guidance when HMRC publishes it later this year. Now, I can hear ministers sniggering at that, And a responsible opposition will vote against something when it disagrees with it, will support something when it agrees with it, and when it wants to consider the detail and wants to consider the implications and what other information comes out from the government, we will hold back. That's what a responsible opposition does, not automatically vote against things or support things willy-nilly. And that's what we're trying to, and that's why we are being responsible. Now, if ministers want to snigger because of that responsible approach, feel free to snigger, but we will continue to be responsible and we will continue to oppose this government as and when we feel it necessary.
Kirsty Black.
Thank you. I'd like to begin by thanking both the Association of Taxation Technicians and the Chartered Institute of Tax, who have provided me with some information so that I can help to scrutinise this incredibly technical piece of legislation that is coming through. I'd first like to raise a couple of issues. To begin with, the tax information and impact notes that have been published on this says explicitly there is no impact on civil society. This is directly contradicted in the explanatory memorandum, which at 12.1 says that charitable organisations will be required to keep more documentation and to gather together that documentation, which they currently don't have to do. So I would suggest that that is a direct impact on civil society, and the tax impact and information note should be updated to reflect the fact that that is an issue. I've got the same concerns as the Shadow Minister in relation to the decision to do the tax in this way, to implement the relief in this way. In June 2018, the Office for Tax Simplification published a report called Accounting Depreciation or Capital Allowances, Simplifying Tax Reliefs for Tangible Fixed Assets. I promise it's hugely riveting. The report said that the tax system should look to reduce or at least not increase the different types of expenditure and classes of assets that have to be identified solely for tax purposes. Unfortunately, the way that the government have chosen to do this increases the number of the types of assets, classes of assets, that have to be identified purely for tax purposes. And this is directly in contradiction to an OTS recommendation. It would be useful if the Minister could explain why they chose to do it this way and not to change the the current system of capital allowances that there are in order to include this along with perhaps plant and machinery, which is already a very difficult distinction for people to make. And I fear that with the lack of guidance that we have, that has been published at this point, that distinction between plant and machinery and fixed assets as in the building itself will remain difficult to be assessed in that way. So I've got concerns about that. The other issue I've got is around the timing of this. So this was announced on the 29th of October 2018 as part of the budget. It was announced as something that would happen immediately. However, we are in July, and we are now considering this in July, and we are considering it without the publication of the guidance. So we do not have the guidance on this to be able to work out whether or not it makes sense in the way it's being implemented. And the other concerning thing, not just for scrutiny for parliamentarians, but for businesses and organisations that are having to operate in this new system since the 29th of October and keep all of the relevant documentation that they may have to keep since that period of time, without knowing what that relevant documentation is, and without knowing exactly the classes of assets that they will be able to claim against in this tax relief. I think it's incredibly concerning that businesses, given the huge amount of uncertainty that they're already experiencing because of Brexit, are having to deal with this additional uncertainty. And I get what the government is trying to do. I get that it's trying to make it a more attractive proposition to create and renovate properties. I understand that logic, but actually they've implemented this in a really cack-handed way that has meant that it has increased the uncertainty over the course of this year, certainly, until we get the guidance and until we see how things are beginning to work. I've said already about the massively heavy reliance on guidance. The last thing about the actual implementation of the tax and the way that it's been put together is concerns have been raised with me about the fact that the government has chosen not to include prisons, for example, in this, and student housing, because they fall under a residential remit rather than under a remit of a corporate property, a commercial property. And I understand why they have chosen to do this, but it seems to me that this is a missed opportunity. You can't class prisons and student accommodation, for example, in the same kind of residential category as you would class a dwelling house. And there may have been an opportunity there, in terms of prisons particularly, given the pressing need that there is for changes in the prison system. There may have been an opportunity there to include some flexibility. I'm not saying this is what the government should definitely have done, but I don't think the government considered that enough and put forward an argument as to why they didn't do it in the documentation that I've seen published by the government. The last bit is about the money and the cost of this. So the Exchequer has said that it will cost £585 million in 2023-24. That will be the Exchequer impact of this. The tax information and impact notes, nor any of the other documentation that I can find, but perhaps it was more explicitly mentioned in the budget and I didn't catch it, does not say the economic impact that they expect in terms of an increase in GDP as a result of these changes, which presumably would have a commensurate increase in the level of Exchequer tax that would be received as a result of this. It would be useful to know whether or not the government thinks that this is value for money, whether it will generate more increase in the economy than it will cost in the tax relief to put in. Because the government have told us how much it's going to cost. It's also told us it's going to cost us £17.7 million for new HMRC systems to be put in order to administrate this tax. But they haven't been clear about the economic benefit that they see coming out of this. And part of that, I think, is because of what HMRC have said in the, again in the tax information document. It says, since Budget 2018, HMRC has attempted to gather further information on the number of those businesses likely to claim the SBA, but they've not been able to do so. So I don't understand how the government could tell us that this will have a positive economic benefit if they can't even tell us which types of businesses and which numbers of businesses are likely to be claiming this tax relief. It would be useful to know if the government has got any firmer details on that since this information note was published, and any information on whether it thinks that there will be an economic benefit. Now, the last thing I would like to raise, which is something that the Minister will get so used to me raising, I'm sure, in the course of the future deliberations that we'll have on SIs and also in finance debates. I would like to know when the government intends to review this tax relief. This is a massive tax relief. It's incredibly large in terms of the fiscal impact that it will have. The government is, I assume, saying that it will have a positive benefit in terms of the economic impact. I would like to know when the government is going to review this tax relief to see if it is working as intended, because there's no point in having a tax relief that will work as intended. And I'm sure the Minister is going to say it will be reviewed in 3 to 5 years and it will be sent to the Treasury Committee and I've just got to look at the government's website at some unspecified point in the next 3 to 5 years. But if they could provide us with a bit more detail on the exact timescales for review of this tax relief, given it is so significant in nature, so that we can, as parliamentarians, scrutinise whether what the government has set out to do with this relief has actually been achieved. And the last thing is around the guidance that I've mentioned already. It would be incredibly useful if, when the guidance is published on this, the Minister would be sure to ask somebody in his team to make sure that both myself and the Labour front bench have got access to that guidance and we are made aware of where it is, because it may be published in some place on the HMRC website that we, as people who don't run businesses that claim capital allowances, will not regularly check. So it would be incredibly useful if the Minister could commit to that small ask, as well as answering many of the questions that I've raised too. Thank you.
Minister Knoll.
Thank you very much indeed, Mr Deputy Speaker, and I'm grateful to both of the previous speakers for the comments. They've made quite wide-ranging comments, but if I may, I'll try to keep my own responses to reasonably short periods. So the Honourable Bootle opposite began with a very wide-ranging critique of reliefs as such and quoted the Institute for Fiscal Studies in general on the issue of the reliefs that have built up in the tax system over the past several decades. Of course, in criticising the government on these grounds, we're trying to that the system does not consistently, as it were, reflect or is not consistently applied across different reliefs. He does not really reflect himself on the fact that this actually is designed to correct an anomaly. We have an anomaly in our system, which is that we do not offer reliefs on structures and buildings, and therefore we are actually removing a disincentive to investment and levelling a playing field in a way that I think has a clear policy justification. He says that there's an absence of transparency, but of course there was 18 weeks of consultation in 2 phases on both the principle and the detail of this, and therefore it's hardly clear that that is true. He raises the issue of tax relief and implies that the Labour government would, I mean, if he wants to correct me, but implies that the Labour government would be removing tax reliefs. If that's true, I welcome his indicating to the House which reliefs a Labour government would propose to remove or abolish, and he can do that now by a point of order if he wishes, or to me, an intervention.
I think that the member oughtn't to put words in my mouth, and I exhort him to read what I said. The point I was trying to make, as a responsible opposition, unlike I've got to say the people in the leadership election who are spending money right, left and centre, we are responsible unlike them. The point I was trying to make, it is important to review reliefs. There are 1,200 of them. Many other countries in the world review reliefs. There's nothing particularly radical about that, and I exhort the government to actually do that.
No, I think the point, Mr. Deputy Speaker, is that it's very hard to start a swingeing criticism of the idea of reliefs and then say that you haven't got any, or not indicate any, that you would propose to abolish yourselves. I think it raises the question of whether or not the Labour Party is itself serious in this, what the Honourable Member described as a corporate welfare, also described as giving away millions of pounds to large companies. Of course, all companies benefit who have qualifying investments and are subject to UK taxation in the way indicated. And so it isn't just larger companies that do. He's also right that many of the reliefs that he describes are negligible in size, and therefore are not something that necessarily should be the target of extensive review. He, of course, talks about the reduction in corporation taxes. That was a bad idea, but somehow neglects the fact that significantly more corporation tax has been raised following these reductions than otherwise. He criticises the timetable, but of course, Madam.
Thank you very much, Mr Deputy Speaker. I'm very grateful to the Minister for being willing to give way. However, I'm sure he's aware of the evidence repeated over and over again by those bodies who've looked into this, that actually the reason for increased corporation tax take was not the reduced rate of corporation tax. Rather, it related to, for example, the return to profitability of banks and so forth. It was not related to the reduction in rate, and just about every authoritative study that's looked at this has suggested that. Thank you.
Well, of course, the fact that companies' return to profitability was the result of proper, prudent financial management, and of course, I remind her that in the specific case of the financial sector, the bank levy has taken billions of pounds a year more from the banks than the Labour tax that it replaced. So I don't think her view has credibility in this context. The Honourable Member opposite criticises the timetable, but of course any correction that the timetable is designed specifically to keep uncertainty to an absolute minimum. The point of saying, and this is a point also for the lady from Aberdeen North, the point of saying that qualifying expenditure on new builds or renovations for which all contracts for physical construction works were entered into on or before 29th of October 2018 will be eligible relief is precisely to give very clear direction to future investment, far from the suggestion being that it would make it more uncertain. I don't agree with many of the points that the Honourable Gentleman has made. Let me just pick up a couple more very quickly. Of course, it's also true that... yeah, of course I will, yeah.
Very good. Does he consider the opposition minister understands how reliefs work, in that he said it was about giving corporations giving away lots of millions of pounds to corporations. Actually, if a corporation invests on the back of a relief, it still costs them money. It just makes the investment slightly more attractive.
Well, my honourable friend's absolutely right, and the point of the reliefs that we've given both on capital allowances and also on the buildings and structures allowance is precisely to level a playing field and to enable and encourage more business investment. I think the gentleman also raises the question about, and the Honourable Lady opposite from Aberdeen North raised the question about reviewing or monitoring. But of course, as they will both be aware, the Treasury and HMRC continuously monitor tax reliefs according to the level of risk they pose, and they publish annual statistics on tax reliefs, including cost estimates, where those are available. I think, if I may then turn to the other points raised by the lady from Aberdeen North. She says that charitable organisations will be heavily affected by this. They are the statement that is being asked to be filled out by acquirers of structures or buildings consists of 4 factual pieces of information. First, what is the asset? Second, when was it built? Third, when did it come into use? And lastly, how much did it originally cost? That is not a heavy burden on any institution. Of course.
To be fair, I didn't say it was a heavy burden. It literally says in the tax information impact notes there will be no effect on civil society, which is not true, because there will be an effect on civil society. It may be a minor effect, but there will be an effect on civil society, and I was just asking for the tax information notes to be updated to reflect that.
I perfectly understand it. It's a verbal point. This is subject to a de minimis fact. Any action of government is going to have some minuscule effect on many people, but that doesn't mean that it's significant enough to register. She raised a question about process, which I've already addressed. She raised a point about the Office of Tax Simplification. The difficulty with the suggestion that they made is that if the boundary were removed between buildings that will get relief at 2% and plant fixtures, etc., which get relief at 6%, the result would have to be a combined rate of relief somewhere in between. The effect of that for businesses, many businesses with long-term investments in plant, would be that they would lose out through reduced relief or delayed relief if the rate went down. And so there would be a significant number of losers and a negative impact on business investment, where we're trying to have the exact opposite effect. She raises the issue about student housing. Of course, this is a measure that is specifically aimed at residential property and other buildings that function as dwellings. It is aimed away from those, but towards commercial properties. And for that reason, student housing is not included, but hotels and care homes will qualify, because the underlying businesses are service providers whose premises are being used in a trade. I think, let me just pick up one other, hold up one second. Yes, of course I will.
Specifically on student housing, most of the student housing, or much of the student housing in my constituency, is worked as kind of almost serviced apartments. They are apartments that have got one shared kitchen and there's a number of flats. It's much more like a hotel or a care home in terms of the fact that it is run as a business and students are only there for a short period of time. Are those kind of serviced dwellings for students included, or are they not included?
The answer is they are not. I mean, she's welcome to write to me with the specific details of the student housing in her constituency. And of course, there are many students who universities regard as living in housing that's equivalent to hotel accommodation of years ago. But the general rule is that it is not included, and that hotels and care homes, etc., where there is this trade, as I've described, are included. And where there's, and I think that's a tolerably clear line. Final point she raises is on the impact on GDP. The Independent Office of Budget Responsibility estimated that the capital allowances package announced at the budget would increase business investment by 0.4%. So that number has been calculated and put into the public domain. And on that measure, unless the gentleman, final point.
I just, whilst he was talking about numbers and putting the record straight, he referred earlier on to the bank levy and the bank surcharge. In 2017-18, it raised 2.6 and 1.9, a total of 4.5 billion. In 2023-24, it will raise 1.1 and 2.1, 3.2 billion. So that is considerably less than it raises now, not the billions more that the Minister suggests it raises.
If I may just correct the record, Mr Deputy Speaker, what I said was that it had raised billions more, and it has raised billions more than the labour tax that it pre-existed, and that is a fact of the financial environment that surrounds banks, as this is a new fact for the financial environment that surrounds corporations more generally. And on that point, I will sit down.
The question is that motion number 3 as on the order paper. As many of that opinion say aye. Aye. The contrary no. I think the ayes have it. The ayes have it.